Hey guys, this is the second video. Like I said, I'm going to talk a little bit more about trading on this video and a couple different things I'm going to go into on this video. The first thing is what my belief is when it comes to trading. And it just got reaffirmed over the course of over the last year, I'd say. And what my belief is in trading is this: that and this is dealing with, I mentor traders. I have a mentor, and the one thing that I notice with newer traders, developing traders, and the people I mentor, and some people who's been doing it for a while, and they haven't turned that corner yet. One of the biggest things that I noticed was, and this is my belief, is the biggest problem that they had was have is they have to be perfect on their entries. Think about that. The market is a random type, it has a random nature to it, right? So you have to be perfect in a sea of randomness sometimes. That's a hard feat to accomplish. And that's where I think a lot of traders fail, where this is the support level, this is the resistance level, and the market hits this level, and they're in, and it have to be perfect at these levels. That's pretty tough to do. And you always have to, and my belief is, you need to come up with a strategy, or however you're going to trade, where you don't have to be perfect with your entry. You could be too early, you could be too late, a little bit sometime. And to me, that comes with scaling in and out of positions, right? That comes with having multiple entries in the position. Think about this for a second. Most institutional traders who go into the market, do you think they go if they wanted to buy a million shares, right? And um and they just want to buy a million shares. Do you think they're just gonna go on the market and just buy a million shares at this level and just call it a day? Or do you think they're gonna, because it's so big, they're gonna scale in and out of it and try to get a certain price? I have a friend who he's a trader. He's not a trader in the sense of like he trades for himself or for profit. He trades for hedge funds. Hedge funds, his firm, hedge funds will call him and say, "We want a million shares of Apple, average price XYZ," and then his job is to go in there and work the book and get in and out of positions and get them their million shares at their average price. And he would tell me that he scales in and out, because he's trying to get the average price for them. So if professional and institutional traders trade in that matter, why shouldn't we? Even though we're on a smaller scale, I get that. But when you scale in and out of positions, it's my belief. When you scale in and out of positions and you don't give yourself that chance to be so perfect, you actually give yourself a chance to be wrong a little bit, to have a little leeway. So what I believe is, how I trade, and this is how I do it. I'll scale into a position three times in the sense of, if I'm wrong. Say I'm going long, right? I get in, market goes a little further down. I'll get in a little bit more, market goes a little down. I'll get in a little bit more. Once it turns in my favor and I'm positioned, I'll start to add to my position as it's going in my favor. That's how I trade, right? So, and if I'm keep scaling three times down and it keeps going, then I'm just wrong, and that's fine. It happens sometime. But what that does is gives me some leeway to be wrong or too early, because sometimes I'm going to be too early, sometimes I may be a little bit late. So it's going to give me just a little bit of leeway to just not be so perfect. And the last thing you need in trading, especially if you're intraday trading, is to be so perfect that if you're not, you're going to keep losing money. The market is kind of random in nature, and that's a tough feat to do, to be perfect every single entry, or to assume to be perfect every single entry. So by scaling in and out of positions, it gives you that little that leeway. And as I'm mentoring traders, a couple traders and their friends, and I would notice that they would get into positions and they would get out because they were wrong, and and it's a psychological thing. So that's when it really hit home for me, lad, within the last year, that I got lucky with when I first got into the trading, that I had mentors who taught me this without teaching me this. Well, I didn't understand what they were teaching me back then, but this is kind of what they were teaching me. Not trying to be so perfect, and I didn't know what I was doing until you get a little bit more experience, and then you start to understand. And that's why I don't really believe in the prototypical technical analysis. I'm not a technical analysis person that says, "Oh, it doesn't work" and all that. But what I'm saying is, I'm not like the person that's going to use the MACD, the stochastics, and all that stuff. And oh, if it hits this support level or resistance level, it's going to bounce. And I think the market's too dynamic. It's too much randomness. It's too many things going on with high frequency, with big small trade. It's just too much going on to just be so perfect. So you don't want to put that stress on yourself. So the traders I work with, once we start to take that stress off of being so perfect, it's like the market opens up a little bit to them because they know I can get into my position and I'm a little bit wrong. It's like a mental comfort to know I don't have to be perfect on this entry. Um, so, and another thing I truly believe in trading, this is two things that I believe is the scaling in and scaling out, and you must have outliers. Trading is all about winning big, losing small, winning small, losing small, going back and forth, and having those one or two outlier trades a day, one day a week, just an outlier day, 1 week a month, 1 month a year. Is just that's how you build success. Like trading, you're not gonna every trade is not gonna be a home run. You're gonna win some, you're gonna lose some, and you hit those outlier trades. Those are the trades that are gonna sustain you while you're going back and forth, while you're pretty much breaking even or slightly above. You should be a slightly above, and then boom, you hit that outlier. Prime example, guys. On yesterday, I was getting handed to me most of the day. I had a short bias, and I'm shorting this all, and I'm getting chopped up. As you can see, it's pretty choppy, and the market's just chopping upwards, and I'm getting choppy, and then boom, I catch this outlier trade. I scaled into this, and then as it started going in my favor, I added. I just kept adding all the way down. Outlier trade. Same thing. I took a few losses here, but that just one trade sustained me from these chop areas over here. Bam. Took that. Took a few losses here and caught this outlier trade and closed it like at 4 right at the market close, and I caught that, and that was another outlier trade, scaled in. Once it flipped and started to show me, I started to add, and it ended up being an outlier trade. These two trades was my day. All this other stuff in between there was just a lot of randomness, making a little bit, getting chopped to pieces, paying my broker nice, nice income. But other than that, that's what trading's about. But this comes with experience. It comes with me knowing that, okay, I'm in the S&P, which is a very chop like market. So all I'm gonna do is need one or two of these trades, and I'm gonna be decent for the day. Um, and that's the main part I want to really drive home. It's more about the the randomness of the market and knowing how to handle that randomness. Yes, you're supposed to add, you know, certain rules to your trading, but if you can do, and I did this last year. And what I did was I studied some random entries. I said, okay, I'm going to get into some random entries, and I'm just going to try to scale into it. And you would find out that on those random entries, that I will actually come out a little bit ahead on those random entries, which really it was an eye-opening experience for me because it showed me that it's more about the money management and the scaling into the position than it actually is about the entry itself. Like a lot of traders spend so much time on entry, then they don't spend enough time on the money management aspect of the scaling in, scaling out. That's the biggest the factor that I learned. And by scaling in, it makes me where I don't have to be perfect. That's the biggest takeaway over the last year, that I want to share. So if you can figure that out, then trust me, you will be uh, miles ahead of newer traders or people who are struggling. So I hope this helped.